Can you still cash flow with this current market right now, the way that interest rates are rising? One of the biggest questions that I get from a lot of investors is, Omedo, can I still go out there and buy a property and still cash flow even though interest rates are fairly high? And that's something that I'm going to jump into this video, and I'm going to explain to you and give you a real life example on a property we just recently bought in South Dallas that we're going to be cash flowing a good amount, actually a little bit more than some of the other ones that we've had, just because we were able to buy at a good enough price, even with interest rates being a little bit high. One of the biggest mistakes I see newer investors make is they look at a property and they look at it and say, hey, you know what? If I can break even, or if I can just make $100, $200 a month cash flow, I'm gonna be okay. And that's something you definitely don't wanna be doing with this current market, right? Because if something happens where market rents could potentially go down a little bit, you're gonna be in trouble, and you don't wanna be in a position where you're actually taking money out of your pocket to pay your monthly mortgage. You definitely wanna have a good cushion, a good spread to make sure that you're able to still cash flow even if things go downhill, right? Where even things like the current market rents go down, which we are seeing in some of the certain metroplex areas across the nation, right? Here in Dallas-Fort Worth, we've been fortunate enough that actually market rents have been not only stable, but they've been increasing significantly in some certain markets. So I want to show you guys and tell you about an actual example, real life example. I bought this property a little over a month ago in South Dallas for $143,000. I put a little bit of renovations. I just put paint, carpet, and actually new fence, right? So this particular property, I'm gonna be all in after holding cost, after origination fees and whatnot. I'm gonna be in about $160,000 on this particular property, and I'm gonna turn around and go ahead and refinance this property for $160,000. So I'm gonna get a loan for $160,000, pay my underlying lien of a short-term hard money loan that I currently have on this property, and my interest rate is going to be a little bit higher. It's going to be somewhere in the high 7s to maybe 8% rate, right? It's probably the highest that I have been paying, because we got accustomed to, even as investors, paying 4.5%, 5% rates for a long time. So with this particular property, my principal, insurance, taxes, payment, right? My PITI, which is principal, insurance, taxes, my total payment is going to be somewhere around $1,500, right? Give or take. And what I'm going to rent this property out, it's a 4-bedroom home that I'm going to be able to rent out for $2,000. I'm actually signing a lease to that property today. So I'm going to be getting a gross cash flow of about $500, which is fairly significant considering all things right now with this current market, right? So the only way that I was able to do that is I was able to buy the property at a significant discount. Now, I'm going to be doing a future video where I'm going to be explaining where if you're paying a lot more, where you're paying maybe current market value for a home, you still can cash flow, but only when you're able to take over an underlying lien that is significantly lower, or you're able to negotiate a very, very low interest rate. So I hope that this video has helped you out. Understand that you still can cash flow in this current market economy, as long as you're looking at all the numbers, as long as you can cash flow. I would say for me, minimum, I like to see at least $400 a month of monthly cash flow if I'm going to keep a property for long term or for more than 5 years. So making sure that you guys are doing your proper underwriting, making sure that you have enough margin, making sure that you have equity, right, and cash flow, just in case that you want to do something further down the road, which one of my plans for this particular property is maybe 5, 7, 8 years from now, I'm going to go ahead and sell this property owner finance and continue my cash flow, but then I'm not going to be the landlord, I'm going to turn it to the bank, right? So if you guys like this content, if you want to get a free training, I do have a free training. It's going to be in the video link description, where you can go ahead and just put your email and I'll send you the video on talking about real estate note investing, on how you can become the bank. So I know I had a lot of really good feedback from that particular training that I did, so you guys can get access to that by just clicking on the first link in the video description. So with that being said, if you want to get more information, more videos like this one, make sure you subscribe, make sure you share this video with somebody that is wanting to learn about real estate, and until then, I'll see you guys on the next video.